Hi guys, welcome back to another video. Today we'll be comparing Home Depot and Lowe's and seeing if one stands out as the better investment. So I made a spreadsheet so it's really easy to compare the numbers. Before I begin, I do want to tell you guys I made a point system for each category that we'll be going over. So by the end, whoever has the most points has the better financials technically. So obviously you shouldn't base your investment 100% off of financials, but it is a solid indicator to see if the company is good or not. I also want to mention that I color coded all the important numbers. So green means good, while yellow means okay, and red means bad. Starting off the P/E ratio, Home Depot currently has a 25.96 and Lowe's has a 23.83. So when investing into a company, you ideally want them to have a P/E ratio of about 20 or less. I marked them both as yellow because it is okay for them to be a little over 20. All this shows me is that the earnings can barely not justify the price it is at right now. Since Lowe's does have the lower PE, they ended up getting the point, as you can see right here. Next thing we are going to take a look at are their dividends. So Home Depot currently offers a yield of 1.79%, while Lowe's currently offers 1.38%. It is nice to see when a company is healthy enough to pay out its investors. Home Depot does have the higher yield, so I rewarded them with their first point, as you can see right here. Let's get into their income statement now. So starting off with the revenue, as you can see, both companies have been doing very well. They have had nothing but consistent growth over the past 5 years. Home Depot's at 132 billion compared to the 94 billion, while Lowe's, on the other hand, is at almost 90 billion, up from their 65 billion. So when it comes to the point system, I felt like the best way to judge the companies is to look at the percentages instead of just the straight up numbers. So Home Depot will always have the bigger numbers since they are the bigger company, but I personally want to look for which company is growing faster, and the only way to truly see that is through the percentages. So in this case, Home Depot has the biggest increase of revenue since 2017 with a growth of about 40%, so they will be getting the point for this round because Lowe's only had their 30%. Next, we'll be taking a look at their net income. So Home Depot has been going up with no problems year after year, while Lowe's is the same thing for the most part. They do have a dip in 2019, but I wouldn't be too concerned since they have shown really good growth in the next 2 years. With the net income, Lowe's gets the point because they do have an increase of 90% compared to Home Depot's 62%. This is why I like the percentages because the numbers can be deceiving. Would you rather invest into a company with 12.87 billion at a 62% increase or a company that has 5.81 billion with a 90% increase? Because at some point, Lowe's is going to catch up to Home Depot and potentially pass them if they keep up the same exact pace. So moving into shares outstanding, again, both companies look really good. They're both buying back shares every year, which is great. They are allowing their shareholders' equity to be worth more. With shares outstanding, Lowe's does get the slight edge with a 15% decrease, so they will be getting a point for this part. So the next thing to look at is their balance sheet. So with Home Depot's current assets, it has been increasing. They took a big jump from 2020 going to 2021. They did have a down year in 2019 though, but it's nothing to be concerned about. Overall, they are up 61% over the past 5 years, which is great to see. So getting into Lowe's, it is basically the same thing. They also took a big jump into 2021, but what stands out the most for me though is that they're currently up 86%, which is obviously more than Home Depot. Therefore, Lowe's gets another point. They're currently at 4 compared to Home Depot's 2. Next is going to be current liabilities. So both companies look pretty much the same. They are both slowly increasing every year, but then they both take a big jump in 2021. I find this to be okay though, since they also took a big jump in assets in the same year. Overall though, the most important thing is that they do have more assets than liabilities, which is the case. So with the current liabilities of Lowe's being an increase of 56%, I'll be giving them their 5th point. Finally, we'll be moving into the free cash flow section. So you want to invest into companies that are increasing their free cash flow as it shows how well the company generates cash to pay its debts and its ability to fund its operating expenses. So getting into the numbers now. So they both show big increases over the past 5 years, which is good. One thing I want to point out though is that Lowe's has 2 iffy years, which is something to keep an eye on. Between the two of them though, Lowe's does have the biggest increase by 7%, but Home Depot is more consistent. The red year that Lowe's had is basically what made me determine that Home Depot is the better choice for this one. So therefore, they will get the final point. Overall, these are two great companies financially, but Lowe's seems to be the winner between the two. They had a total of 5 points to Home Depot's 3. Both companies are in the green of like 90% of the stuff I covered, which is really amazing to see. I feel like both stocks would make for a solid investment at the right price. From what I have gathered, I feel like a good price target for Home Depot would be between $340 and $380, while a good price target for Lowe's might be between $220 and $260. Finally, I would like to mention that I am not a financial advisor and you should not base your investment completely off of what I said throughout this video. I recommend you to do more research before coming to the conclusion of buying or selling. If you would like to recommend a company for me to take a look at, feel free to comment. Otherwise, I hope you all enjoyed the video and have a nice day.